It's me Pavitran here. Today we're gonna do weekly forecast of crude oil, how price is going to behave, and what are the levels we should be watching out for coming week. Before that, small recap of what are the levels which we had given last week and how price reacted to that. Last week, there somewhere around it was taking market sentiments was slightly kind of a bullish one. Why? Because as you can see, if we have marked this one, or if we can try to, yeah, this was this market sentiment that I was looking for. So it's a kind of an market sentiment was kind of a bullish channel, considering this as first higher low, first higher high, second higher low. This one is a second higher high, and this one is a third higher low. And you can see if market tries to break the previous higher low, that was mentioned on 20, maybe around this is the time. I was expecting a market to somewhere around settle between 41.50 to 38.50. That was the level which I have mentioned. I was expecting that much range to happen. Why? Because the fall of last week on Monday. After that, the fall did not continue. There was no follow through until the Monday's fall. The origin of the fall gets broken on upper side. Then the view of this fall will get negated. So I was expecting if the break of 38.50 happens, then we will be seeing a much further fall. And I was not very confident that it will break this trend line. On Monday too, it opened on a positive note and started again to fall. Then after that, somewhere around 3 or 3:30, a huge buy had happened. As you can see, that was a big green candle. That's exactly happened at 3:30, 15:30. I don't know what is the exact reason behind that, but I thought, okay, this going to be fun, and it will break the bullish channel and it will start to go further higher high. Once if it close below 41.50, then bull trend or bull rally will continue till 43.50. So that was the level which I had in mind. I did not trade on Monday, and on Tuesday too I did not trade, and on as you can see on Tuesday it's started to get a resistance from the trend line. If connecting the highs of the previous somewhere of which is formed on 18th of September, I just connected it, connected with the recent drop, so that trend line was also is intact. So we obviously have two kind of patterns. One is a bullish channel, and it's a kind of a sideways market, and this one is a kind of a triangle pattern. And if the triangle pattern, or we can say if it breaks, then the fall will be vigorous. Usually on either if it breaks on upper side, this triangle, if it breaks on upper side, then the same vigorous fall will be rallying towards the upper side. So triangle pattern has two things in common. It can give a break on any other sides. We don't know exactly what sentiment will that be carrying on, but you should be very cautious. Once it breaks, then the fall will be as swift as possible, or once it breaks on upper side, then the rise will be as swift as possible. So on Wednesday, or exactly maybe around on Tuesday, the fall has triggered. It broke the trend line. Even the triangle trend line has been broken, and the bullish channel that also gets broken. So it is very obvious that the trend line of both the bullish channel and the triangle lower side has been breached. So it's obvious that market is starting to turn into an bear channel. Once that trend line gets broken, then the bull channel will get negated. So we should be cautious that we should be having only the triangle pattern. Main reason is that bull channel, after breaking the low of the trend line, then it gets negated. So there is no use of having an extra trend line over here, because that pattern, um, the work of the pattern, or we can say the image, or the view of the pattern is over. So we should not be having that anymore. and once that breaks off, then we have seen a swift fall. I was expecting a break of 38.50 on a coming on the next day or day after tomorrow. That was I was expecting. As you can see again, a peanut triangle, it has given break on an upper side. So we don't know, as I mentioned earlier on the last week, maybe 2 weeks back, even the same triangle pattern, it had given a break on upper side. You can see the swift move, the same happened over here. This is also a triangle pattern, it break below, then it gave a swift move. The same way, this is a small triangle one, and if it breaks on upper side, if it breaks on a lower side, then the fall will be swift to what are the levels which I mentioned is 35.80 will be coming, but it broke on an upper side somewhere around at 7 o'clock, and the inventory data seems to be so positive on crude oil, and it also started to rally up. So I was expecting a fall on that day, and at 9:30 I think I shorted at here. After seeing this inverted hammer, I shorted, and my entry was somewhere around 70 or 80, I can't exactly remember that. I shorted it, I placed my stop loss above this inverted hammer high. Usually I used to place stop loss there because of the candle high. The main reason is that we exactly don't know whether price is going to go still higher or not. If you have a capital, then we can able to average, but since in India it is not possible to average because loss will be so much of the capital, nearly 10% of the loss we have to bear. We, even though we know it's going to fall, we can't able to take the risk because the amount involved is so big. It literally will consume 10% of your capital of whatever you having. Say I am having 1 lakh rupees, and if I have averaged here, and if I average at every fall, then my fall, it will keeps on raising till on the next day of 12th. I have to keep on averaging the price, or I have to book loss, so which is not possible for the capital which I am having. So I have booked a loss over here, and also waiting for a kind of a move. I was expecting market will fall further. The main reason is that it had tested the trend line over there. After that, this fall, I usually will take entry somewhere around 7 o'clock and 9:30, that is around evening. Usually I don't enter into the markets other than these timings. Why? Because some of the range bound moves I will get stuck in. I want an immediate result, either it has to be stop loss or it has to be a target. I don't want to get stuck in a range bound, so I decided that only time market will be volatile is somewhere around 7 o'clock. From 7 to 9:30 market will be around very volatile, because 1900 US market opens, volatility will comes in, then it will be easy for you to either um, fresh high or fresh low, then or else a range bound which will hit your stop loss eventually. As you can see, the market started to fall. After that, a big fall came, and after seeing this triangle, I was a little bit taken back. I was thought that this might be the end. A bull channel might get formed from here, because whenever triangle breaks on upper side, it will go, and there is no sure thing that it will again break below the triangle. There is no sure thing as that. I was expecting the bulls came into the market, then 39.50 will be taken as a support, then it will try to break the upper trend line. So this was somewhere around 40.30. So I changed my view after this little fall. I changed my view to, okay, might be bulls might have taken over the market. So I was assuming that after this fall it came even after this. So 18:30 it gave a big red candle. I was expecting market to take support somewhere around here, or it can take somewhere around here market, and I was waiting for a buy opportunity. I was not looking to short. If I have to look for a short, then this candle or even this candle high should be my stop loss. So I was not very comfortable with that, so I did not short any position. Instead, I was waiting as usual for my buy to get triggered in, and around as you can see at 2030 my buy has triggered. I usually place buy at 2030 candle low, so this candle low is 37.64 something. I placed buy at 37.65. My order got triggered, and my usual stop loss is usually I will try to hold for at least an hour. So if you can see a rally of maybe $2, literally $2 to $3 rally, if you can see that much rally, and if price or somewhere around 8:30 to 9, some if market keeps on falling continuously from the morning till evening, then it has to give some kind of retracement. So I will be entering in that kind of a retracement zones. My timing is somewhere around 8:30 to 9:30. In between this 1 hour, whenever find a suitable low which has been formed at 8:30, I will go in and enter the trade. In this case, 37.65 is the low which has been made at 8:30, so just entered at 37.65. My stop loss is usually I will hold it for hour. If the fall is so vigorous, I will exit at 37. Maybe we can give 50 or 40 cents as a stop loss, but I usually don't trade with stop loss during these times, because I used to average at the lower prices with the loss, and I will try to come out in maybe around cost to cost if things go badly. I won't able to book loss out here. This situation, I have watched it many times, and it's a kind of mean reversion too. Whenever market falls vigorously, it has to go back, or it has to retrace a little bit, then market has to again fall continuously. So that is the pattern I was be looking for, and that is why I placed my buy order at 37.65. Usually I won't place stop loss. If I have to place stop loss, then 40 or 50 cents will be much more applicable. You can't able to place $1. So even if you have to place $1, then it will take a lot. If it's a stop loss, you will get psychologically affected. So whatever stop loss you have to place, it should not affect your psychology. I can take a maximum hit of 40 to 50 cents. So whenever market say I have placed an order, market comes to my stop loss, I will average over there, because I know market will reverse from some point over there. I usually won't place stop loss, like been repeating the same thing. This is not ideal setup to trade, but we will be getting some quick rewards, maybe around 50 cents or even $1 rally is possible. We exactly don't know when it's going to come, but there is a huge possibility of even a $1 rally is possible. So that is why I like to trade in this setup. Most of the time I will be rewarded very much if I follow stop loss, but since I'm not following stop loss, then I can't able to keep track of how these things works. So if you want to try to observe in the market in the coming days, whenever market falls to $3 range, then you wait for a time around from 8:30 to 9:30. If you find a low which has been formed at 8:30 or even 9 o'clock low, then you can place an order with stop loss of from the low 40 cents or 30 cents, whichever stop loss you can able to take in. This was my entry, and I booked somewhere around here, I think 38.50. I entered at 65 and booked at 50, I think. So it's literally 85 cents I have booked over here. The next day it's very much obvious that it's going to fall. It's going to fall vigorously. At 10 the fall had started. After that you can see it was got stuck in a range one. It was trying hard to fall again. It came down, and somewhere around 18 6 o'clock it again made a fall, and at 9 o'clock it zoomed again. So uh, might be we can able to say that this is not we have expected, because we are expecting a fall still further. If I have to trade on that day, on Friday, I will be expecting fall at even 9 o'clock, but to my surprise it again reversed and it started to go up. It's a kind of a retracement rally, or you can say got stuck in a range bound. Was not expecting a much fall than this, but eventually it did not fall further to my expectations. So that's very much obvious. Market can't able to keep on falling. It has to uh, maybe kind of form a base, or it has to go into an accumulation zone for a further fall or to further rise up. So what are the levels coming week? What are the levels or what are the patterns you should be watching out? Is this week there has been no pattern. This is not a valid pattern. So market has fallen so steeply, so even a trend line won't work out there. And if I have to say what is the resistant level, then that 38.50 will act as a resistant. Why? Because it has broken the resistant over here, it has became support. Market came in, it became as a support, and again market came in, it became as a support. All these after this break, here and here market has acted as a support. Once that gets broken, it is starting to act as a resistance. So now this will be a key resistance zone. So 38.50, have in mind 38.50 will be the key resistance to watch out for. And as usual, support is 35.80. I don't know when this level will get broken, because as you can see last week a huge rally happened over this price around $36 region. So it will be very interesting to watch out for this level. Why? Because as I said, that was an origin of the rally for this buying. From here the buying happened till 41.50, so that's literally an $5 rally. So that origin, the buyers who have taken position here will surely will able to defend this region. So to break this level, you need a dominant sellers who can able to break this level from the buyers. You can take control over from the buyers who have been waiting here to again go long in the market. So you should be very careful out there. Right now a strong selling will come only in the market if it breaks 35.80. we need a close. If we get a close below 35.80, then we will able to see 32 or 31. Let's see how this week fall is going on. And on upper side, just be careful at 38.5. If that breaks, then 40.50 will provide a great resistance for bulls to finally get control of the market. They need to break 41.50. If they are not going to break that, then it's always a sell on rise market. So let's see how this week goes on. This week range for me is 40.50, or you can even keep 41.50, but I'm very much confident that 40.50 won't be taken out. Let's see how this goes. So this week range is 40.50 to 32 or 34. That is a bigger range. This 34.50 will provide a good support. First support is 35.80. So if you want an immediate range to watch out for, 38.50, 35.80. So it's a kind of a matching number, 38.50, 35.80. So this is the range you should be watching out for. It can take support, or it can be in a range bound in these levels. And once that range is taken out, 35.80, then look out for 40.50. So even if that breaks, final hurdle is 41. If that 41.50 is taken out, then it is obvious that bulls are again back in control of crude oil. And if they are struggling over this region, then sellers are trying to dominate the market. Once 35.80 gets broken, then obviously 34 and 32, 31, finally 30. I'm expecting 30 either this week or coming week. Based on the price action, it is obvious that it's clear a sell on rise market until 41.50 is safe. If 41.50 is taken out, then we should be looking out for another patterns, and let's see what kind of pattern we will be formed. Until then, trade carefully at these levels, And whenever if you're going for a buy, just book small profits. Whenever you're going for a sell, try to book or trail your profits, because it's a sell on rise market. You will get nice steep falls over here, so you can able to catch the rally. Trade accordingly and trade with the stop loss. Thank you.